What's going on, everyone? Good evening. We're going to talk about triple witching because it's very relevant. It's actually tomorrow, December 17th. It's the last one of the year. This happens once per quarter. We're going to get into what this is all about, what it will do, and how it affects the stock market typically. Look, it's the moon. Wind moon. What is triple witching day? Options and derivatives traders know this phenomenon well because it's the day when 3 different types of contracts expire. It happens only once per quarter and can cause wild swings in volatility, as large institutional traders roll over futures contracts to free up cash. Doing so creates a ton of increased volume, sometimes 50% higher than average, especially in the last trading hour of the day, only 1/3 of the time. So historically speaking, we see increased volatility and volume on average about 1/3 of the time. In fact, some might even view this volatility as profit-making opportunity, like I do. Now, which 3 types of derivative contracts expire tomorrow on triple witching day? We're looking at index options, index futures, and stock options. Now, stock options, these are contracts taken out on the direction of a stock price at a future date. Unlike stocks, they're not an investment in a company. Rather, they're the right to buy or sell shares of a company at a later time frame. Calls let you buy stock shares at a set price, known as the strike price, on or before the expiration date that you get to choose based on the available options. Puts give you the right to sell shares, and you're betting on a stock's decline if purchasing puts. Now, index options, these are futures contracts on a stock index such as the S&P 500. These options are settled in cash. Index futures, these are futures contracts on equity indexes. These contracts are also settled in cash. So upcoming triple witching dates for the remainder of this year and next year, we have December 17th, 2021, March 18th, 2022, June 17th, 2022, September 16th, 2022, and Friday, December 16th, 2022. Now, what is the witching hour? Well, in the U.S. stock market, the last hour of the trading day before the closing bell sees the most trading activity, so the witching hour is from 3 to 4 p.m. Eastern. In folklore, the witching hour actually happens in the dead of night from 3 to 4 a.m., oftentimes when I'm awake. It was known as a time when spirits reached the height of their powers. During the Middle Ages, the Catholic Church even banned people from venturing outside during this time so as not to get caught up in the chaos. So you take that logic, and today, such ideas aren't taken any more seriously than mere superstition, but triple witching can cause chaos amongst investors if they are not aware of what is happening. Well, so what happens on triple witching day? As one could imagine, a lot of trading activity happens in the market when these 3 stock options, index options, and index futures all expire. We're taking a lot of money basically during triple witching. And basically in September 2021, the amount of money we were looking at there was around 3.4 trillion of equity options that expired. Now, should they roll their positions or close them out? And if so, by how much? Are they going to adjust? How will they adjust? This is what generates the increased trading activity, is everyone is trying to speculate what they're going to do with their decisions, with their positions. Roll them, sell them, close them out. They have so many options, literally, no pun intended. This is what generates the increased trading activity, and the large trades, especially from offsetting trades, can cause temporary price distortions. At the same instant that the derivatives contracts expire, the anticipatory hedges that traders have placed become unnecessary, and so traders also seek to close these hedges, and the offsetting trades result in increased volume. These large volume increases can in turn cause price swing or volatility in the underlying assets. So triple witching itself does not move the stock market, obviously. It's just it creates increased volume. In the same way, the expiration of the options and futures contracts don't necessarily result in volatility. That's actually caused by the actions that the traders take based on the temporary price fluctuations of their underlying assets, which can be moved due to the increased volume. So when this happens, arbitrageurs try to take advantage, often making trades that are completed in mere seconds. An arbitrager is a trader who looks for price inefficiencies in a security and then seeks to make a profit by buying and selling it simultaneously. I know, sounds like some crime. Now, is triple witching bullish or bearish? Historically speaking, triple witching is not always an up day or a down day, so to speak. It does not signify a trend, basically. Typically, it neither moves the market significantly higher nor lower. It simply adds temporary increase to volume and liquidity. However, it's important to note that market volumes also tend to be higher on index rebalancing days as well as during and after broader macroeconomic news events. So, when taken in tandem with triple witching, these events can cause big moves in the market. So, if there's any macroeconomic news that happens to surface tomorrow, could cause some chaos. But, however, the real question remains to be asked because it's never been experienced before. What happens on triple witching day when the repo market sits at a historic $1.654 trillion in demand and the inflation rate is at an all-time high? I guess we'll have to ask again tomorrow. See you then.